Big news is coming out of France later today that is set to shake up the markets. French Prime Minister François Bayrou faces a crucial confidence vote, while many investors think that there is already priced in because we've seen the decline in the CAC since the calling of the vote. History shows that political shocks in France can still move the index in a big way. Of course, we're talking about the second largest economy in Europe. Euro USD is also likely to move. So, what do retail traders need to know? Well, Prime Minister Bayrou is widely expected to lose the confidence vote. The government collapse would deepen France's political paralysis, with no party holding a clear majority since the 2024 snap election. The far-right National Rally is now the largest single party, while a loose coalition on left-wing parties forms the largest bloc. But neither can govern alone. President Macron is unlikely to call another snap election as well. So instead, he may try to appoint a new prime minister from the center left to form a workable government and pass a budget. So the index has already fallen from the 8K psychological level down to around the 7650, forming a short-term double bottom currently. But both markets are flashing warning signs, as well as the not just the French yield, but also the spread over German bonds as well, which show investor anxiety. So, what could really happen? I mean, there is really four options. A government falls, and the search for new PM begins, and it might take a while to appoint a new market-friendly premier to form a stable coalition, which means it will increase uncertainty. And this sort of prolonged deadlock, or could really influence the markets. There is an option, of course, of a radical shift as well. And if this paralysis continues, or if a far left or far right coalition gains influence, we can also expect further downside. I will be looking at the 7500s in this particular case, and perhaps even lower in the longer term, especially if following the vote, Fitch is going to uh, downgrade the credit rating of France. They did once following the previous vote or the snap election. Not, I don't quite recall which one was the case, but there's been one downgrade already. A second one would add to the index's downside. And of course, another catalyst would be for to the upside if there is a fiscal policy announcement, right? And this announcement um, is like addresses the budget deficit in a positive way. Of course, the announcement doesn't need to be positive. It could be also negative. For example, if there is aggressive spending or other business policies announced, these could spook investors, and there is going to be, of course, um, further downside. So, in a bearish scenario, we have no stable government, we have the budget impasse continuing, and or a radical shift towards anti-market policies, either far right or far left influence. Renewed selling below the 765, okay, and I would be looking to short that. Uh, Initially, first target would be the 75, which is also double bottom, sorry, and a stop loss just above the previous high. This is a short-term range that we're dealing with in the 4 hour, right? Although volatility is expected to be high, so um, if you take into consideration that in previous last time we actually retrend back to around the 50%, right? So if something similar happened, we haven't really gotten much more space to play with, considering that prices went up to around the 7-8. So this would be taken out because volatility is likely to increase. But the good scenario in this particular case, and if of course the the search for a new PM continues for a long time, and it's likely to be the case, we'll be looking for the 50 and the 61.8, and this is what adds a little bit of sort of credibility in the quality of this particular trade to the short, to the downside. Okay. Of course, we have the bullish case as well. The bullish scenario means Macron appoints a new broadly acceptable premier, likely from the center left, and a stable coalition forms. And they also pass a credible budget. So, not sure how likely this is, but uh, this should and could um, trigger a renewed a relief rally. Okay, so relief rally will be looking something to the opposite side. We'll be looking at the entry at the top of this range around the 775, a stop loss just below the previous low, and a top around the 8K, actually a stop below the 7.6 if we're looking for short term. And then we're looking for around the 8K. I would be looking closely also this trend line to the upside, which comes below the 8K, you see. And I will be also looking at the 7912, this low over here, a little bit closer. There is divergence here that indicates that there is potential for further upside, but there is also divergence over here. Okay, that shows us there is potential for downside. So I'm thinking that this could be a potential trade on the one hand to the downside, and equally we'll be looking for something like this to the upside. Okay, it really depends on on what the outcome of the vote is. But just to give some historical context, French markets have a long history, of course, of reacting sharply to political shocks, and relief rallies often follow the formation of a stable market-friendly government, while prolonged uncertainty or radical policy changes can lead to sustained sell-offs. Now, I think I'm more leaning towards a prolonged uncertainty case, but we never know, which means that any relief rallies for me would be considered as another opportunity to go short. I would also, on the downside, be looking for this. Hold on, I remember looking at the different level. Hold on, maybe it's on the daily. Yeah. So connecting these two lines and bringing this all the way up. Okay. Uh, this looks like some sort of running triangle, to be fair as well. So I wouldn't be surprised that if in the longer term, if the situation really deteriorates and Fitch even goes and downgrades, I would be looking at perhaps even the 7K, but that would be a very, very, very bearish scenario. I'm not sure really that we want to go that far, because that would add a lot of uncertainty in European markets in general. But I think one way or another, um, going down to the previous low here, because this is a large range that we have been trading in since May. I think going down to the previous low around the 7500s, it's a likely scenario. To sum up, Monday's confidence vote is a major event for French markets and also European markets and the euro dollar. While some risk is already priced in, any surprises could drive sharp moves in the index. So watch those key levels, stay nimble, and be ready for volatility.